What's up everybody, T-Cash here, and in today's video I'm going to be giving you guys 4 tips of what you need to know before getting your first or next real estate investment. So stay tuned to this video. 4 quick things that you have to just be aware of, and regarding going into any real estate project that you're getting into. I think this will be super beneficial for you guys, and it's helped me out a lot. So tune into this video, and like always, make sure you like, comment, and subscribe to the channel for some more fire content. Let's get to it. Alrighty guys, so rule number 1. The one thing that I'm always looking out for going into a real estate investment is the 1% rule. Now, what the 1% rule basically means is that, for instance, if I purchase a property for $100,000, that I am to receive 1% of that purchase price in gross rents. And now this is 1% of the purchase price and whatever you decide to put into the property as well. If you buy your property for $100,000 and then you put $50,000 in renovations, and you're all in $150,000, you need to be 1% of that. So that means you need to be getting a gross rent of $1,500. Now, this rule, it's very tough to find in today's market for a long-term rental, but it is definitely still attainable. And if you're able to get this, you're pretty much able to cash flow and cover up all your expenses. Now, short-term rentals, I do give myself a higher standards for short-term rentals. And that being, I look for the 2% rule with short-term rentals, which means if I purchase a property for $200,000, I'm looking to make around $4,000 in gross rents per month. And that's because there's a lot of expenses with short-term rentals. You're a little bit more hands-on, and you're looking to cash flow a bit more with short-term rentals. So the second tip that I look for in going into any real estate investment is being at 65% in all of my cost of the ARV, or the after repair value. So for instance, if the ARV is $200,000, and that means the nearest sold comp, or what the market value for a renovated property is $200,000, I want to be $65,000 in purchase price and renovation and repairs. So that meaning I have to be all in $130,000. So like I said, if it costs around $50,000 to maintenance and repair this property, I want to purchase a property for $80,000, so I'm all in $130,000. Now you're probably asking, why do I need to be 65% of the ARV? And there's a lot of costs that come into play when you're trying to either sell the property, the holding time, and you want to be around 65%. Another reason why you want to be at 65% of the after repair value is because if you're deciding to do a cash out refinance and you want to hold on to the asset and take a little bit of money out, more than likely banks are probably going to be giving you guys 75% LTV. So if they value it at $200,000, they'll be giving you 75% of that, which is $150,000. So you'll be able to take some money out on the cash out, and you'll probably be able to take your initial deposit, initial investment out as well, and you'll be able to cash out with that. So being at 65% of the ARV is huge in terms of giving you a nice cushion to sell your property, make a nice profit off of, and then either being able to hold on to the asset at 75% loan to value and the cash outs and tax-free money as well. So number 3, the third tip for going into your next real estate investment property is to have multiple exit strategies. Now, when I say having multiple exit strategies, it's not just relying off the sale of the property, because anything can happen. Markets can crash, markets can go up and down. You might not sell it for the price that you want to sell it. So you need to have multiple exit strategies. With that being said, maybe you can rent it out. Maybe you can short-term rental. Maybe you can rent it out by room. Get creative. Maybe you can rent out the top unit and the bottom unit. Whatever it is, get creative, but don't just have one exit strategy. Because if you're banking on one exit strategy, it can get a little ugly towards the end. And I can tell you guys from experience, there's been lots of times where the exit strategy that I've depended on ended up not being the exit strategy that I relied upon, and I honestly veered off into another exit strategy because I did have multiple exit strategies. So make sure you have multiple exit strategies. Number 4, The fourth and the last tip I'm going to give you guys is make sure you're benefiting from the 4 pillars of real estate investing. And those 4 pillars are appreciation, cash flow, loan pay down, and tax benefits. Now, you're not going to strike gold on every one of them, but make sure that you're able to receive some type of income in each 4 of these aspects. So make sure you're able to benefit from appreciation. Now, I'm not saying 10x on your appreciation year 1, but make sure over the course of 10 years that you will be making an income from appreciation in your real estate asset. Number 2, cash flow. Make sure you're cash flowing, guys. You're not holding on these properties for no reason now. So make sure every month that you're receiving some type of cash flow. Number 3, loan pay down. Make sure you're paying your loan down. Make sure you're, if you're on a 30-year note, in 30 years, that loan is going to be completely paid off. If you're on 15 years, same thing, make sure it's paid off in 15 years. And last thing, tax benefits. Real estate has plenty of tax benefits. Make sure you know what types of tax benefits that you're going to be getting and get those tax benefits. There's a reason why we're investing in real estate. So try to get those 4 pillars of real estate investing and make sure you benefit from them. Alrighty guys, so those are the 4 tips that I suggest for you going into your next real estate project. And those 4 tips are: 1, make sure you're hitting that 1% rule for long-term rentals and at least that 2% rule on short-term rentals. Number 2, make sure you are 65% of the after repair value. Number 3, make sure you have multiple exit strategies. And number 4, make sure you're benefiting from the 4 pillars of real estate investing, which are cash flow, appreciation, loan pay down, and tax benefits. Alrighty guys, so that was it. Those are my 4 tips. And if this video was useful or it helped you out, make sure you comment and like this video so it can get out to more people, and also subscribe to the channel for some more fire content. Peace.